सही आ रहा है ना?
जी सर। चलिए सर क्लास स्टार्ट करते हैं। बिस्मिल्लाहिर्रहमानिर्रहीम। ACCA PM F5, today is the webinar for December 2022. Now we are going to discuss our topic of standard costing variances. Now what is the definition of standard costing and variances? Okay जी, सबसे पहले हम लोग छोटा सा एक कॉन्सेप्ट डिस्कस करते हैं, then moving forward to हम लोग क्वेश्चन के ऊपर आ जाएंगे। Now, what is mean by standard costing? What is mean by standard costing? Now let me discuss it with the example. For example, now, for example, आप एक मार्केट के पास गए, सुनिएगा सर, आप एक मार्केट गए फर्नीचर के लिए, आप गए फर्नीचर मार्केट और आपने बोला जनाब कि जरा मुझे बताइए सर, आप फर्नीचर मार्केट गए, आपने सर एक कुर्सी देखी, वहां पे आप शॉपकीपर से बोलने लगे कि जनाब ये कुर्सी जो मुझे बनवानी है आपसे, और इस चेयर बनाने पे कितनी कॉस्ट इंकर्ड होगी, आप मुझे बताइए इस चेयर को मुझे कितने का दे देंगे, लेकिन मैं अपनी थोड़ी सी स्पेसिफिकेशन चेंज करना चाह रहा हूँ। सर शॉप वाला क्या करेगा? शॉप वाला बोलेगा अच्छा जी बताइए। सर शॉप वाला क्या करेगा? शॉप वाला आपसे पूछेगा कि सर आपको किस किस्म की जो है ना वो चेयर चाहिए, उसमें वुड, सर इसके अंदर जो है ना वो कुशन होने चाहिए, पॉलिश किस कलर की होनी चाहिए, साइज कितना होना चाहिए, बेड कितनी होनी चाहिए। आपने उनको कंप्लीट डिटेल बता दी, सर आपने उसको कंप्लीट डिटेल बता दी कि सर इतनी बेड होनी चाहिए, इतनी चौड़ाई होनी चाहिए, क्वालिटी ऑफ बोर्ड इस टाइप का होना चाहिए, कलर पॉलिश सिस्टम की होनी चाहिए, कुशन लगा हुआ होगा, तो सर किस कंपनी का मल्टीफॉर्म लगा हुआ होगा। सर ये सारी चीजें आपने उनको एक्सप्लेन कर दी, ये सारी चीजें आपने उसको एक्सप्लेन कर दी, ठीक है सर, ठीक है। हमने बोला सर ये सारी चीजें आपने इनको एक्सप्लेन कर दी है, क्या शॉप वाला ये करता है? सर क्या शॉप वाला ये करता है कि ठीक है सर, आपने जो बातें मुझे बताई है मैंने नोट डाउन कर ली है, मैं कल आ जाना, कल मैं आपको इसकी प्राइस बता दूंगा, कल आ जाना, कल मैं आपको इसकी प्राइस बता दूंगा। सर क्या शॉप वाला ये करता है? नहीं सर। फिर शॉप वाला क्या करता है? शॉप वाला बोलता है कि सर जरा रुके, एक कैलकुलेटर निकालेगा और उस पर कुछ वर्किंग करेगा, एक कैलकुलेटर निकालेगा उस पर कुछ वर्किंग करेगा। सर वो क्या वर्किंग कर रहा होता है? उसके बैकएंड पे माइंड पे क्या चल रहा होता है? कैलकुलेटर में बटन दबाना शुरू कर देगा। सर सुने, उसकी शॉप वाले के माइंड सेट में क्या चल रहा होगा? सर शॉप वाले के माइंड में चल रहा होगा कि सर ये जो उसने मुझे कुर्सी बनाने का ऑर्डर दिया है, ये जो उन्होंने मुझे कुर्सी बनाने का ऑर्डर देना चाह रहे हैं, ये मुझसे जो प्राइस पूछ रहे हैं, सर इसमें मटेरियल कितने लगेंगे? फॉर एग्जांपल सर इसने बोला कि मटेरियल कितना लगेगा, फॉर एग्जांपल 5 kg, फॉर एग्जांपल 5 kg। सर 1 kg कितने का? सर 1 kg फॉर एग्जांपल $9 का, तो मटेरियल की कॉस्ट कितनी आ जाएगी? सर इसी तरह ये शॉप वाला भी सारी वर्किंग माइंड में कर रहा है, उसने बोला सर अच्छा लेबर 1 यूनिट बनाने के लिए लेबर के कितने आवर्स लगेंगे? फॉर एग्जांपल 8 आवर्स, और 1 आवर के 1 घंटे के आप लेबर को कितने पैसे देंगे? $7 पर आवर। फिर सर उसके बाद मेरे पास फैक्ट्री ओवरहेड, अस्यूम फैक्ट्री ओवरहेड is charged on the basis of direct labor hours. Sir, labor hours for 1 unit is 8 hours and rate has been calculated on the basis of OAR, overhead absorption rate, budgeted factory overhead divided by budgeted capacity, that is your direct labor hour, and the number of and the rate of factory overhead is $4 per hour. Now, what would be the cost per unit of the furniture? Now, what would be the cost of furniture? Just wait. I am bringing my calculator. Just hold on. I'm bringing out my calculator for the calculation purpose. Just hold for 2-3 minutes. Yes, Hassan, just wait. I'm just putting out my calculator. Okay, now material, assuming $45 per unit, 8 multiplied by 7. Labor $56 per unit, 8 multiplied by 4, and this is 32 per unit. Now 32 plus 56 plus 45, that is 133. Good, Hassan? Good. Okay, क्या कुर्सी बन गई है? नहीं सर, कुर्सी अभी बनी नहीं है, बल्कि अभी शॉप वाले ने क्या किया सर? शॉप वाले ने कैलकुलेटर निकाला, उसने बोला सर आपने जो स्पेसिफिकेशन बताई है उसके हिसाब से 1 यूनिट बनाने पे मटेरियल कितने लगेंगे सर? 5 केजी, 1 केजी 9 रुपए का। ये सारी कैलकुलेशन शॉप वाले के माइंड पर हुई है सर। ये मेरे पास क्या कहलाएगी? दैट इज कॉस्ट पर यूनिट। नाउ assuming company has a policy to charge profit 10% on their cost, it means 133 multiplied by 10%, 13.3. Now the shopkeeper quoted a selling price to customer is cost plus profit. It means 133 plus 13.3 means 146.3. सर शॉप वाले ने कस्टमर को बोला कि जनाब आपको एक चेयर कितने की पड़ेगी? 146.3 की। बना दूं क्या सर? आप कस्टमर हो, आपने बोला यस सर प्लीज गो अहेड। आप कुर्सी बनाइए, आप कुर्सी बनाइए। सर मैंने आपको ओके दिया, ये लो थोड़े से पैसे एडवांस रख लो ताकि भरोसा हो कि आप भागोगे नहीं। प्लीज गो अहेड, यू कैन स्टार्ट अ मैन्युफैक्चरिंग। शॉप वाले ने क्या बोला? ओके प्लीज कब? आफ्टर 15 डेज। सर 15 दिन का टाइम दो और आके फिर अपनी कुर्सियां उठा लेना और बकिया पैसे दे देना। सर अब क्या होगा? अब प्रोडक्शन स्टार्ट होगी। अब क्या होगा सर? अब प्रोडक्शन स्टार्ट होगी। अब जो है वो गुड्स बनाना शुरू करेंगे। सर गुड्स बनाना शुरू करेंगे। नाउ अब शॉपकीपर क्या करेगा सर? अब शॉपकीपर क्या करेगा? अब शॉपकीपर प्रोडक्शन स्टार्ट करेंगे। तो सर शॉपकीपर अब जाकर लकड़ी खरीदेंगे, मटेरियल खरीदेंगे कुर्सी बनाने के लिए, कुशन उशन होगा वो भी खरीदेंगे, और सर फिर कुर्सी बनाने के लिए काम करना शुरू कर देंगे। सर अब जब हकीकत में काम होना शुरू हुआ, लेबर ने क्या सोचा था सर? लेबर ने क्या सोचा था? शॉप वाले ने क्या सोचा था? एक चेयर बनाने के लिए कितने केजी लगेंगे? 5 केजी। बट इन एक्चुअल material used for production of one chair is 5.6 kg। सर नहीं हो सकता क्या? डेफिनेटली हो सकता है बॉस, डेफिनेटली हो सकता है। एंड कॉस्ट पर केजी, हमने क्या शॉप वाले ने क्या अज्यूम किया था? कॉस्ट पर केजी अज्यूमिंग $9 पर, now $9 per kg, but in actual cost per kg is $9.2. Now what would be the cost for actual cost of material for 1 unit? Means 5.6 multiplied by 9.2, that is sir, that is $51.52। ये कॉस्ट लगी है मेरे पास कौन सी वाली सर? एक्चुअल वाली। नाउ द नेक्स्ट लेबर, हमने लेबर को बोला चले सर बैठिए प्रोडक्ट बनाइए, चले सर बैठे गुड्स बनाइए प्रोडक्ट बनाइए। नाउ द लेबर, हमने क्या सोचा था, लेबर की कॉस्ट पर वर्क यूनिट कितनी कट होगी, 8 घंटे। सर कितनी कट होगी मेरे पास, लेबर की कॉस्ट पर वर्क यूनिट इज 8 आवर्स। लेकिन सर एक्चुअल में कितने घंटे लगे, सर एक्चुअल में 7.5 आवर्स। और 1 घंटे के हम क्या सोच रहे थे, लेबर को कितने पैसे देंगे शायद, बट द लेबर एक्चुअली रिसीव $7.5 पर आवर। हो सकता है सर, डेफिनेटली हो सकता है। तो सर कितनी कॉस्ट सिक्योरिटी मेरे पास, एक्चुअल में 7.5 मल्टीप्लाई बाय, सर इसको मैं चेंज कर लेता हूं वरना आप बोलोगे सर ये तो बिल्कुल सेम हो गया, इसको मैं 7.8 कर देता हूं। 7.5 actual labor hours incurred for the production of per unit and actual labor rate per hour is 7.8. It means actual labor cost for the production of 1 unit is 7.5 multiplied by 7.8, that is 58.5. Now the next is factory overhead applied. Factory overhead applied is charged on the basis of direct labor hours. Sir, what would be the direct labor hours? 7.5 hours actually utilized for the production of 1 unit and actual rate. What was the budgeted or estimated rate? That is $4 per hour, but the actual rate per hour is $3.5, 3.8 per hour. Now 7.5 multiplied by 3.8. Now what is the actual cost of factory overhead which would be incurred for the production of 1 unit of chair is 28.5. Now 28.5 plus 58.5 plus 51.25. 51.52 plus 58.5 plus 28.5. Now the actual cost is 138.52 for the production of 1 unit. जी सर हमने कस्टमर, हम शॉप वाले, फॉर एग्जांपल हम शॉप वाले, हमने कस्टमर को बुला लिया कि सर आइए 15 दिन के बाद ये कुर्सी तैयार हो गई है। सर क्या सीन हुआ, अब कॉस्ट कितनी कट हुई है बॉस, अब कॉस्ट कितनी कट हुई है 138.52। सर अब कॉस्ट कितनी कट हुई है 138.52। हमने बोला सर ये जो 138.52 की कॉस्ट इनकट हुई है, सर कंपनी पॉलिसी इज टू चार्ज प्रॉफिट 10% ऑन कॉस्ट। इट मींस 138.52 मल्टीप्लाई बाय 10%, सर 13.85। सही है, आई एम जस्ट राउंडिंग ऑफ द नंबर्स एंड नाउ द एक्चुअल सेलिंग प्राइस इज 13.85 plus 138.52 152.37। सर आप पहुंचे, आपने ऑर्डर दिया था, आप पहुंचे अपनी कुर्सी उठाने के लिए, कस्टमर ने पहले, शॉप वाले ने पहले क्या प्राइस कोट की थी सर 146। आप तो यही माइंड लेके पहुंचे कि सर मैंने तो इतने में जो ना कुर्सी खरीदनी है, और सर जैसे ही आप 15 दिन के बाद शॉप वाले के पास गए कि लाओ भाई मेरी कुर्सी दो, तो शॉप वाला क्या बोल रहा है, सर आप ज्यादा पैसे देंगे, अब आप ज्यादा पैसे देंगे। सर मैंने जो अमाउंट आपको बताया था और एक्चुअल के अंदर उसके अंदर वेरिएशन है, आप वारंटी ज्यादा पैसे दें। सर कितने ज्यादा पैसे देंगे, सर आप मुझे दोनों का डिफरेंस है, सर आप $6.07 ज्यादा पे करें। सर यहाँ पे लड़ाई हो जाएगी, यहाँ पे फट्टा हो जाएगा। क्यों सर, कस्टमर क्या बोलेगा, भाई क्या ड्रामेबाजी है, मैंने नंबर आपसे लॉक करवाया था कि मुझे आप एक चेयर इतने की दोगे, सर तुम्हारा अंदाजा गलत हुआ तो मैं क्या करूं, ये तुम भुगतो। सर बात समझ में आ रही है, तो सर ये जो एस्टिमेशन कम या ज्यादा हो रही है, कम या ज्यादा हो रही है, सर इसका इम्पैक्ट कस्टमर को पास ऑन नहीं किया जाता। सर कस्टमर से कितने पैसे रिकवर करवाए जाएंगे, सर जितनी आपने उसको प्राइस कोट की थी, एंड यू कोटेड अ प्राइस टू द कस्टमर फॉर $146.3। now the actual profit on this chair 138.52 minus 146.3, now the actual profit is 7.78. what was you assuming, the profit on that order is 13.3, but the actual profit on this order is 7.78। क्या बात समझ में आ रही है सर, इसका जो इम्पैक्ट है वो किसने कंसीडर किया, सर इसका इम्पैक्ट किसने बेयर किया, सर इसका इम्पैक्ट बेयर किया है किसने, सर शॉप वाले ने, मींस बिजनेस वाले ने। सर सुने, व्हाट इज दिस, सर व्हाट इज दिस, this cost or this complete cycle is estimation before the start of the project. This is estimation before the start of the project, and this is called your standard costing. Sir, now what is the mean of standard costing? Now what is the mean of standard costing? Sir, definition of standard costing is estimated cost or predetermined cost. Estimated cost or predetermined cost means cost that you have been estimated before the start of the project. Now what is this cost? Now what is this cost? What is this is your actual cost. Now this is your actual cost. Agreed. Now what is your standard cost for making this product? For material $45, and now the actual cost incurred on this order for material 51.52 minus 45, 6.52. Now what is the standard cost or predetermined cost for material on this order $45 for material and for actual 51.52. Now the difference of cost is 6.52. Is this favorable for the company? Increase of cost is adverse for the company because it declined the profit. Sir, ultimate objective of the organization is to maximize the profit. Now what is the impact on this increase of cost? 6.52. Sir, increase in cost means reduction in profit. Therefore this is adverse for the company. Now this is adverse or unfavorable for the company. Now the second one, what we are estimating for the labor cost of one unit, that is 56 as per standard. Now but the actual cost incurred is 56.5. It means labor cost increase by $2.5 per unit. Is this favorable for the company? No. Increase in cost is adverse for the company. Increase in cost is adverse for the company. This is also the adverse. Now the next is what we are estimating, what we are making a standard for making the 1 unit of factory overhead. Sir, factory overhead cost for 1 unit is $32, but the actual cost of factory overhead on this product is 28.5. Now this is the reduction in cost by $3.5. Sir, reduction in cost means increase in profit. This is favorable for the company. Yes, definitely. Reduction in cost ultimately impact on the increase in profit. Therefore this is favorable for the company. Now what is the net impact on that? 2 adverse, 6.52 is adverse plus 2.5 is adverse. The total adverse is 9.02 and 1 is favor, that is 3.5. Therefore we are netting this figure and ultimately answer is 5.52 adverse. Now the adverse variance is 5.52. Agreed. I hope you all clear this definition or this concept. Now what is this? Sir, this is difference between standard and actual. Now this is called variances. Now what is the definition of variances? Sir, what is the definition of variances? The definition of variances is difference between standard and actual. Now the definition of variances is difference between standard, short form is STD, standard and I hope you all clear this concept. I hope all of you understand this concept. Yes, sir, clear. Now moving forward. Why this adverse variance of 6.52? Now moving forward, why this concept of 6.52? Why this figure is arisen 6.52? There is a difference between standard and actual. Sir, why this number is incurred? Because we estimate that material incurred, 5 kg of material incurred for producing one chair, but in actual 5.6 kg of material incurred. It means 6.52 is split into two category. The number of 6.52 is split into two category. First one, we estimate 5 kg or material incurred for the production of 1 unit, but in actual 5.6 kg of material used for the production of 1 unit. Now the second one is what we are estimating. We will purchase material $9 per kg, but in actual we purchase $9.2 per kg. Now basically 6.52 is arising for two reasons. Adverse variance of material 6.52 arises because of two reasons. The first one is for the usage of material. What we are assuming, 5 kg of material incurred for the production of 1 unit, but in actual 5.6 kg of material used. The second one is what we are assuming, what we are estimating. We will purchase material price per kg for $9 per kg, but in actual we purchase for 9.2 per kg. Now this difference is called material price variance, and this difference 5.6 and 5 kg, this difference is called material usage variance. Same with the labor variance. So same with the labor variance. What we are estimating, what we are thinking, sir, what we are estimating, what we are thinking, labor will require 8 hours for the production of 1 unit, but in actual labor hours work 7.5 for the production of 1 unit. Now the 2.5 adverse variance is arise because of the labor efficiency. Labor produce quicker. Labor efficiency is more than estimated. Now the second one is what we are estimating. So labor rate for 1 hour. Labor rate for 1 hour is $7, but in actual labor received for $7.8 per hour. Agreed. So now the labor adverse variance 2.5 is split into two category. The first one is labor efficiency and the other one is labor rate variance. Same with the factory overhead. I hope you understand all the concept of this example. Now we are going to move forward the next example and the chart of the variances. Now I am erasing this board. Now I am going to erasing this board and discuss another example or discuss the next question. Anyone of you copy this example? Okay, just take a screenshot and copy it on your Word file. Just take a screenshot and paste on your Word file. Okay, now. Oh, sorry, Hasan. I erased the board. I just saw your message right now. Okay, now. So now we are clear what is the variances. Now we are clear what is the variances. Variance is the difference between standard and actual. Variance is the difference between standard and actual. Now How many types of variances? Basically, there are two types of variances. First one is cost trend variances, and the second one is revenue variances. Now, we are splitting this category into material variance. The second one is labor variance. Now, the third one is factory overhead variances. Just hold. Yes. Now, the third one is factory overhead variance. And the next is sales variance. Now, the material variance is split into two more categories. Now, the material variances is split into two more categories. The first one is material price variance. The second one is material quantity or usage variance. The first one is material price variance, and the second one is material quantity variance. Some material quantity variance further is split into two categories. If two or more material are required to produce 1 unit. If two or more unit are required, if two or more material are required to produce 1 unit, therefore we may split material quantity variance into two categories. For example, cake. We are manufacturing cake for using more than one material. For example, flour, sugar, butter, chocolate, lemon. Now, these cakes require more than one type of material, Therefore, we may split material quantity variance into two categories. The first one is material mix variance. The second one is material yield variance. Now, the first one is material mix variance and the second one is material yield variance. This concept is applied when two or more material are required to produce 1 unit. When two or more material are required to produce 1 unit. Fine, it's fine. Now the next is labor variance. Because we have a shorter space. Now the second one is labor variance. Now we may split labor variance into two categories. The first one is labor rate variance. The second one is labor efficiency variance. The first one is labor rate variance and the second one is labor efficiency variance. Now move on to the next variances. Now the next variance is factory overhead variances. Now the next variance is factory overhead variances. We may split factory overhead variances into two categories. The first one is factory overhead variable variance. and the other one is factory overhead variable variance. Now the second one is factory overhead fixed variance. Just wait. Yes. Now factory overhead variable variance. We may split factory overhead variable variance into two more categories. The first one is factory overhead variable expenditure variance. Factory overhead variable expenditure variance. Now, the second one is factory overhead variable efficiency variance. Factory overhead variable efficiency variance. Now, same with factory overhead fixed. Now, factory overhead fixed is further split into two categories. The first one is factory overhead fixed expenditure variance. The second one is factory overhead fixed volume variance. The first one is factory overhead fixed expenditure variance. The second one is factory overhead fixed volume variance. Now the factory overhead fixed volume variance further split into two categories. Now the factory overhead fixed volume variance further split into two categories. Now the first one is factory overhead fixed volume capacity variance. Now the second one is factory overhead fixed volume efficiency variance. Factory overhead fixed volume efficiency variance. Now the last one is sale variances. The last one is sales variances. Now the sale variances split into two categories. The first one is sales price variance. The first one is sales price variance. The second one is sales volume profit slash CM, that is contribution variance. Now moving forward, the sales volume variance further split into two categories. Yes, there is a lot of variances. Basically, this is the detailed analysis of the difference between standard or budget or and actual. Now, sales volume profit variance further split into two categories. The first one is sales quantity variance, and the second one is sale mix variance. The first one is sales quantity variance, the other one is sales mix variance. All of these variances is split into two further categories, that is planning and operational variances. That is planning and operational variances. I hope you all understand this chart of variances. I hope you all understand this chart of variances. Please take a screenshot and copy on your Word file. I am just giving you a 2 minutes. I am just giving you a 2 minutes. Please take a screenshot and copy on your Word file. Later on, you can copy it. Just give me a 2 minutes, okay? Thank you. Just give me a 2 minutes. Okay, now moving forward, I'm erasing this board. Going forward, I'm erasing this board. No, you all have a handout. No, you all have a handout. There is a question number 1, which is just a practice question. Practice question of the basic variances. Then moving forward, we are going to discuss the planning and operational variances, which is the most important area of examiner for F5. Yes, PM. Now, you all have a handout. That is question number 1. This is Hero Limited. This is Hero Limited. Now I am reading this question. Prepare a reconciliation statement. Prepare a reconciliation statement from budgeted profit to actual profit with adjustment of all variances. Now you may prepare a budgeted profit and reconcile it with the actual profit with the adjustment of all variances. Now the question is starting from the top. That is, Hero Limited is engaged in the manufacturing of safety product for the construction industry. The following production information for further analysis has been provided by Hero Limited. Now, the per unit budgeted cost for 1 unit. Per unit means for 1 unit. Now, the material is 10 kg of material required at the rate of $22 per kg. It means the cost per unit is 220. Labor 1.5 hours of labor at the rate of $110 per hour, and the labor cost per unit it means 165. Variable overhead rate, it means that the variable overhead rate is applied on the basis of labor hours. That is same hours which is used in the labor for labor calculation. Also used for the factory overhead variable and fixed. It means 1.5 hours at the rate of $55, and same with fixed factory overhead 1.5 hours at the rate of $110 per hour. Now the total cost per unit, budgeted cost per unit is 632.5. The budgeted variable overhead 866, and the budgeted fixed overhead is 1732,500. Now the first bullet is fixed and variable overhead are absorbed on the basis of direct labor hours, and what are estimated to be 15,750 hours per hour. It means that the budgeted labor hour for the calculation of factory overhead fixed and variable rate is 15,750 hours. I hope you all have a handout of this question. If any one of you don't have it, please WhatsApp me. If anyone of you don't have it, please WhatsApp me. All of you have a handout of this question? Yes, sir. Now the actual result is direct material. Actual result means that a direct material 100 kg 1650000. Direct labor 13,000 hours 1573000. Variable overhead 910,000 and fixed overhead 1692900. Now the actual cost Actual cost of material, labor, factory overhead, variable and fixed is 5825900. Now the second bullet is budgeted sales of the Hero Limited is 10,500 unit at a price of $1210. Now what is the budget? Now we are making a budget for selling 10,500 unit at a price of 1210, and the actual sales revenue of the company is 12.54 million. 12540000, and the actual number of units sold is 9,500. Now what is the selling price per unit? Now what is the actual selling price per unit? Now you may calculate it by total revenue, that is 12540000 divided by number of unit 9,500. It means the actual selling price is 1320. Now actual price is 1320. Now what is the actual selling price? Now what is the actual selling price? Actual selling price per unit. Now the actual revenue is 12,540,000. Actual number of units sold is 9,500. Now so the actual price per kg per unit is 12,540 divided by 9,500. Now the actual price per kg is $1320. Now the first variance. Now first we calculate all the variances. And then we will reconcile the budget profit to the actual profit. Now first we calculate all the variances. Now starting. I hope you all copied this. The actual selling price per unit is $1320 per unit. Now I am going to calculate, first of all, I am going to calculate all variances, and then we will reconcile it. Now, first of all, now we are starting from the material. Now we are going to start from the material. Now, what is the difference? What is the definition of variances? The definition of variance is difference between standard and actual. What is the definition of variance? Difference between standard and actual. Now what is the standard? Standard cost for making 1 unit of the safety product of the construction industry. Now 10 kg of material required to produce 1 unit, and standard price is $22 per unit. It means that the standard cost per unit for making 1 unit is $220. Now the company manufactured and sold 9,500 units. Company manufactured and sold 9,500 units. Now what is the actual cost? What is the actual cost of this material? Is 1650,000. Now the variance is the difference between standard and actual. The difference between standard and actual. Double 20 multiply by 9,500, 2090,000. This is standard cost for making 9,500 unit, but the actual cost for making 9,500 is 1650,000. Now the material variance is 440,000. Adverse or favor? Now adverse or favor? Yes, definitely favor, because the standard cost is 2 million, 2.09 million, but the actual cost is less than standard cost. It means the reduction in cost means increase in profit, and increase in profit is favorable for the company. It means this is favorable variance. FAV is the shortcut of the favorable variances. Now we may split these variances, this material variances, into two categories. Now we are splitting this material variances into two categories. Now the first one is material price variance. The first one is material price variance, and the second one is material usage or quantity variance. Material usage or quantity variance. The first one is material price variance. These differences arise because of the two two bases. The first one is for price and the second one is for usage. Now the first one is material price variance and the second one is material quantity variance. Let me say 40. Lot of sugar on it. Okay, now material price variance and material quantity variance. Material price variance. Yes, this variances arise because of the arises because of the difference between what we thinking, what we are estimating at the time of making the budget, at the time of making the standard. We assume that we will purchase a material, for $22 per unit. We assume that at the time of making the budget, at the time of making a budget or standard, we will purchase a material at $22 per kg. But in actual, we purchase material amounting $1,650,000 divided by 100,000 kg. We procure $1,650 million of rupees, $1.65 million rupees of 1000 kg. It means that the actual price per kg is 16.5. Now we purchase material, actual material purchase is 16.5, and what we are thinking at the time of making the estimate is 22. It means the reduction in cost reduction means increase in profit. This is favorable for the company. Now the variance is favorable, the material price variance is favorable. Now how many kgs we have procured? How many kgs we have procured? 100,000 kg. Now 22 minus 16.5, that is 5.5, multiply by 100,000 kg. Now the material price variance is 550,000 favorable. The material price variance is 550,000 favorable. Now what is the formula of this variance? What is the formula of this variance? Yes, boss. What is 22? Boss, what is 22? 22 is standard price per kg. What is 16.5? 16.5 is actual price per kg multiply by what is 100,000? Actual material purchased or used. Actual material purchased or used. I hope you all clear it. Now the next variance is material usage or quantity variance. Now these variances arises for the usage of the variances. Now what we are thinking at the time of making an estimate, sir, what we are thinking, we have making an estimate that 10 kg of material, how many kg? Sir, 10 kg of material, 10 kg of material required to produce 1 unit. How many number of units have been made? Sir, that is 9,500 unit. Actual production is 9,500 unit, and we are thinking only 10 kg of material required to produce 1 unit. It means that 9,500 kg required 95,000 kg. 9,500 units required. How many kg? 95,000 kg. But the company actually use 100,000 kg. It means that company use more than company use more 5,000 kg. It means increase in cost, reduction in profit. This is not favorable for the company. This is adverse for the organization, adverse for the company. And for the standard price per unit, the standard price per unit is $22. Now what is the variance of material usage variance? Now what is the variance of material usage? 95,000 minus 100,000 multiplied by 22, that is $110,000 adverse. Now you may net off this 550,000 is favorable and 110 000 is adverse. Now the net figure is 440,000 favorable. It means the total material variance is 440,000 favorable. We may further analyze and split into two categories, that is material price variance. It means that procurement department did a did a good job, and they procure cheaper material, but it has a second impact that this cheaper material maybe would require more usage. You can show it. This is proof that 95,000 kg required to produce total quantity of 29,500 units, but in actual the usage is 100,000. It may have an impact of cheapest purchase of material, more usage of material. I hope you all clear it. This is your material variances. Now you may take a screenshot and copy on your Word file. Now the second one, I am going to start the labor variance. Now I am going to start the second variance. This is labor variance. Have you taken a screenshot? May I move to the further variances? Now I'll move to the further variances. Okay, boss. The second variance is labor variance. Now I am erasing this variance. I am just note down it here for my future working. Material price variance is $550,000 favorable, and material quantity variance is $110 adverse. I am writing up here the answer for the reconciliation purpose. This will help me for in the reconciliation. Now I am erasing it. Now moving forward, we are going to discuss the second variance, that is labor variance. Now we are going to discuss the second variance, that is labor variance. Labor variance. Now what is the variance? Variance is the difference between standard and actual. Sir, variance is the difference between standard and actual. Now what is the standard for making 1 unit? Now what is the standard for making 1 unit? The standard of labor is 1.5 hours are required to produce 1 unit, and the standard rate, what we are estimated that $110 per hour. So the standard labor cost per unit is $165, and company produced 9,500 units. Now what is the standard cost of this unit, and the actual cost of labor is 1573000. Now what is the definition of variance? Sir, definition of variance is difference between standard and actual. Sir, difference between standard and actual. Now 165 multiplied by 9,500, 1,567,500, and the actual is 1,573,000. Now the variance is 5,500. Adverse or favorable? Yes, boss. Adverse or favorable? Adverse. Yes, sir. Because the actual cost is more than standard cost. Actual cost increase means profit decline. This variance is adverse variance. Yes, boss. Now, we may further analyze this variance. Why this adverse variance has happened? Now, why this adverse variance has happened? Now, we may split this variance into two categories. Now, the first one is labor rate variance. The first one is labor rate variance. And the second one is labor efficiency variance. Now, as their name, what is this? As their name, labor rate variance. This variance arises because of the rate of the variance. We may assume we will pay dollar at the time of making a standard or budget or estimate. What we think? We think that we will pay labor rate $110 per hour. But in actual, what we paid? Sir, in actual, we paid 1573,000 for 13,000 hours. For 13,000 hours. Now, what is the actual labor cost per hour? 1573000 divided by 13,000. Sir, it means that we paid $121 for actual rate per hour. Now we are calculating labor rate variance. Sir, what is the variance? Difference between standard and actual. Sir, difference between standard and actual. What is the standard cost? What we are thinking? We think that we will pay how much? $110 per hour. But in actual, what we paid? But in actual, we paid 1573,000 for 13,000 hours. Now the actual rate per hour is $121. It means that the main reason for this adverse variance is for the labor rate variance. You pay more than budget rate. And the actual labor hours work is 13,000 hours. And the actual labor hour work is 13,000 hours. Now, what is the variance? 121 minus 110 multiplied by 13,000 $143,000. This is the standard rate. This is the actual rate. Actual rate is more than standard rate. It means cost is more than budgeted or standard. Increase in cost, so decrease in profit. Decrease in profit is unfavorable for the company. It means this is adverse variance. Now, what is the formula of this variance? Now, what is the formula of this variance? What is this, boy? 110. What is this? 110 is standard rate. What is rate? Labor rate. Definitely. Standard rate per hour. What is 121? 121 is actual rate per hour. What is 13,000? Sir, what is 13,000? Actual hours. Agreed? I hope you all clear it. Now the next one is labor efficiency variance. The next one is labor efficiency variance. What we are thinking? We think that labor required only 1.5 hours for the manufacturing of 1 unit. What we are thinking? Labor need only 1.5 hours for the manufacturing of 1 unit. Now, 1.5 hours for the manufacturing of 1 unit and labor manufactured 9,500 units. It means that labor need in totality 14,000 to 5 hours, but actual labor did it in 13,000 hours. Labor is coefficient. Labor use less hours. Sir, how many? Reduction in hours is 1250 hours. This is favorable for the company. Less time usage for the manufacturing of 9,500 unit. It means that reduction in cost, so increase in profit. If this is favorable for the company, and the standard rate per hour, is 110. Now 14250 minus 30,000 multiply by 110. Now the labor variance is 137,500. This is favorable for the company. So this is favorable for the company. Now you may net it out. Sir, you may net it out. Labor rate variance is 143 adverse. HR or organization pay more rate. It means maybe. Sir, labor is fully motivated for the increase in wage rate. Therefore, it work full efficiently. And 14,250 required hours. Labor used only 13 hours to make this product. To make labor full efficiently due to motivation, due to increase in wage rate. This may be possibility for writing in your descriptive answer. You may write it in on your descriptive answer. No, you may net it out. Sir, 143,000 net of this is adverse and 137,500 favorable. Now the net variance is 5,500 is adverse variance. I hope you all clear this concept. We may move forward. We may move forward. Okay, now the next variance is, sir, factory overhead variance. Just give me a 2 to 3 minutes break. We are right back. For 2 to 3 minutes break. Okay, now the next variance is factory overhead variances. Now I am erasing this board. The recording is uploaded on YouTube, KNS YouTube channel, KNS School of Business Studies. Yes. The recording will be uploaded on KNS YouTube channel. Now the next variance is factory overhead variances. Factory overhead variances. Now, we had a discussion. We had a discussion in F2 studies on factory overhead chapter. We calculated their over and under applied factory overhead. Also, we calculate this over and under applied factory overhead or absorption and marginal costing chapter. Now, what is the over and under applied factory overhead? How to calculate over and under applied overhead? Factory overhead, actual factory overhead less applied overhead. Actual factory overhead less applied overhead. Now, what is the actual overhead? The actual factory overhead, variable plus fixed. Sir, variable plus fixed. Now, the variable actual factory overhead is 910,000 plus fixed factory overhead is 1692,900. Now, the actual factory overhead is 910 plus 1692,900. Now the actual factory overhead is 260,900, and the applied factory overhead is factory overhead rate multiply by actual production. Now the factory overhead rate is 82.5 for variable and 165 for fixed. Now the total factory overhead cost, variable plus fixed, variable plus fixed, 82.5 plus 165 $247.5 multiply by actual number of unit produced is 9,500 is 9,500. Now 247.5 multiply by 9,500 2351250. Now, the actual factory overhead is 2.6 million and the applied factory overhead is 2.35120. Now, there is an under applied. Under applied means you charge less cost to the customer. It means the remaining of the cost that is 251650 paid by the company itself. It means this is not favorable for the company and this is your adverse variance. 2602 900 minus 2315250 2602 900 minus 2351250. The adverse variance is 251650. Now we are going to split this factory overhead variances into two categories. The first one is factory overhead variable variance and the second one is factory overhead fixed variance. Now this is your total factory overhead variances. Now we are going to split these variances into two categories. Now we are going to split these variances into two categories. The first one is factory overhead variable variance and the second one is factory overhead fixed variance. Now actual factory overhead variable variance. Now the actual factory overhead variable variance is 910000 and applied factory overhead fixed variance is now the applied factory overhead rate is 82.5 per unit multiplied by total number of unit produced is 9,500 unit. So the applied factory overhead is 82.5 multiplied by 9,500 783,750. Now the factory overhead variable variance is 910 000 minus 783 750 126 250. This is your factory overhead. Actual cost is more than applied factory overhead. This is your under applied. It means this is your adverse variance. Now the next one is factory overhead fixed variance. How to calculate the factory overhead fixed variance? Actual factory overhead fixed. The actual factory overhead fixed is 1692 900 and applied factory overhead fixed is now the cost per unit is $165 multiplied by 9,500 units were produced. Now 165 multiplied by 9,500. Now the applied factory overhead is 1567500. It means the company charged to the customer total amount 1567, but the actual factory overhead is 1692 900. It means 125400 is your adverse variance. This is not favorable for the company. This is adverse variance, not favorable for the company. You may split, please net of this figure. 126250 is adverse and 125400 is adverse. So the total adverse variance is 251,650. 251,650. I hope you all understand this concept. Now the next we are going forward. Factory overhead variable is further split into two categories. Now the factory overhead variable is further going to split into two categories. Now the first one is factory overhead variable expenditure variance. Factory overhead variable efficiency variance. Factory overhead variable expenditure variance and factory overhead variable efficiency variance. Now this variance is donated for the expenditure variance. Now how to calculate this? Now what is the standard rate per hour? Sir, what is the standard rate? We are discussing only about the factory overhead variable expense. Now, what is the standard rate per hour? That is $55 per hour. And what is the actual rate per hour? Now, the actual rate per hour is, now we are going to calculate here the actual variable factory overhead is 910,000 and the actual labor hours per is 13,000 hours. So the actual rate per hour is 910,000 divided by 13,000. So the actual rate is 70. It means standard cost is less than actual cost. So the variance is adverse. Multiply by actual hours work is 13,000. Now the 55 minus 70 55 minus 70 multiply by 13,000. So the answer is 195,000 adverse. Now the next variance is factory overhead variable efficiency variance. Factory overhead variable efficiency variance. Just 2 minutes. चले सर. Now the next one is factory overhead variable efficiency variance. Factory overhead variable efficiency variance. Now standard labor hours per unit labor, because the factory overhead rate is absorbed on the basis of direct labor hours. So the standard hours for 1 unit is 1.5 hours. Multiply by total number of unit produced is 9,500 units. So it means that labor should need 14250 hours, but the labor actual took 13,000 hours. It means labor is more or efficient. Sir, labor is more efficient. How many hours labor save? Sir, labor save 1,250 hours. It means that the electricity consumption also decreased due because of the labor switch of the machinery. Machinery will also be run for 14,250 hours, but the labor speedily completed this unit. And took only 13,000 hours. Then switch off this machinery, so the electricity bill will also be reduced, and the electricity bill is the factory overhead cost. Now, what is the factory overhead rate? The factory overhead rate is 55. Now the variance is $68750 favorable. Now you can net out this. 168,750 is favorable and 195 is adverse. So the net variance is 16250 adverse. I hope you all understand this concept. Now we are going forward. Now the next variance is factory overhead fixed variances. We may further split into two categories. The first one is factory overhead fixed expenditure variance. The other one is factory overhead fixed volume variance. Now the factory overhead volume variance is further split into two categories. The first one is volume efficiency. The another is volume efficiency and volume capacity. Now we are going to erase some space of this board so we can complete the factory overhead fixed variances. Please take a screenshot and copy on your Word file and copy on your register later on. So we are going to erase this one. We are going to erase this one. You may take a screenshot and copy it on your Word file. Okay, now I am erasing this. Okay, now we are going to split factory overhead fixed variance into two categories. I am starting from here. Now, two categories. The first one is factory overhead fixed expenditure variance. Factory overhead fixed expenditure variance, and the other one is factory overhead fixed volume variance. Now, as described in the name, this variances arise for the expenditure, low expenses or more expenses. These variances arise because of this volume. Now, the first one is factory overhead fixed variance. The first one is factory overhead fixed expenditure variance. Now, what we are thinking when we making a budget, we assume that we making a budget for the factory overhead that is 1732. That is 1732,500. This is your budgeted expenditure, but the actual expenditure is 1692. But the actual expenditure is 1692,900. 900. It means that budgeted expenditure is more than the actual expenditure, or you may say that actual expenditure is less than budgeted expenditure. This is favorable for the company. Less expenses means more profit. 39600. 39600. Actual expenditure is less than budgeted expenditure. Therefore, this amount is favorable for the company. This amount is favorable for the company. Now, what is the formula? What is this? This is budgeted fixed factory overhead minus what is this? This is your actual fixed factory overhead. It's fine. That's clear. Now, the next one is factory overhead fixed volume variance. The next one is factory overhead fixed volume variance. Now, how to calculate this one? Factory overhead fixed volume variance. Volume. As you know, the volume. Now, what is the budgeted volume? What we are thinking? Sir, what we are thinking? What is the budgeted volume? Sir, the budgeted volume is how many units? You are going to produce 10,500, but actually you produce less unit. This is not favorable for the organization. You determine that your task, your budget is to produce 10,500 unit, but in actual you produce only 9,500 unit. It's less than the budgeted. This is not good for the company. The lower production is not good for the company. It means that This is the unfavorable, means adverse variance, and the budgeted factory overhead rate per unit is 165. Now what is the factory overhead fixed variance? 10,500 minus 9,500 multiplied by 165. It means that the variance is 165,000 adverse. 165,000 adverse. Now please net it out. Net it out. 96,000, 39,600. Sir, means labor adverse, factory overhead fixed adverse variance is 125,400 adverse. I hope all you clear it. I hope you all are clear it. Now, the factory overhead fixed. What is the formula of this factory overhead fixed volume variance? What is this? This is the budgeted volume. Budgeted volume means budgeted production. And what is this? This is the actual production. This is the actual production. Multiply by what is this? This is the standard fixed factory overhead rate. Sir, this is unit, this is production. It means that you may also multiply it from the standard fixed factory overhead rate per unit. Fixed factory overhead rate per unit. Done. Now the next one is, sir, you may further split it into two variances. Now you may further split it into two variances. Sir, sir, the name of this further two variances is factory overhead fixed volume capacity variance, and the next one is factory overhead fixed volume efficiency. Sir, what is mean by capacity and efficiency? For example, you are going to start your career, your job, and your official timing is 9 to 5. You are going to start your career, your job, and your official timing is 9 to 5. Labor come at 9 o'clock and work till 5 p.m. Now, how many hours of this work? Sir, this is the 8 hours. Assuming there is no lunch off time. The working hours is 8 hours. 8 hours a day. Okay, labor, it means that 8 hours a day multiply by 5 days a week. Working days is 5. Saturday, Sunday is off day. 5 days a week is working hours. So the total number of hours per week is 40 hours. 40 hours. Labor come out late. Labor come in office in a factory, for example, 10 p.m. or 11 p.m. and come out earlier. It means labor is doing work in less capacity. What is the capacity? Capacity means total number of hours which will provided to the labor for the working, and labor doing less hours. Labor come late in the factory and left early in the factory. It means that labor did not utilize their full capacity. This is your capacity. And but labor come at 10 a.m. The official timing is 9, but labor come at 10 p.m. and out at 5 p.m. So labor utilize their less capacity, but at that time labor produce more unit. Labor is fully efficient, fully motivated, but not punctual. You may say that labor is not punctual. Labor come late in the factory, but are more efficiently and produce quick unit. The labor produce more unit. This is your efficiency. But labor is not punctual. This is your capacity. Now we are going to calculate the capacity. Now how many hours? We give to the labor. We give 15,750 hours. This number is mentioned in bullet number 1. Sir, the estimated hours is 15,750 hours. But labor did only 13,000 hours. And the standard labor hours rate, this is hours. So we are here, right? Standard factory overhead rate per hour, this is 110. Now the labor capacity is to work 15,750 hours, but labor work only 13,000 hours. It means labor is not punctual. Sir, labor did not work 2750 hours, and the rate per hour is 110. So the variance is 302,500 adverse. Now the next one is factory overhead fixed volume efficiency variance. Now what is the volume efficiency variance? Sir, labor did only only 30,000 hours work, but is more efficient and it is quicker and the labor is very efficient. Standard labor hour for producing 1 unit. Standard labor hour for producing 1 unit is 1.5 hours. 1.5 hours, and a number of unit produced is 9,500. It means that 9,500 multiplied by 1.5 hours. So 14250 hours required for total number of hours that labor need for the production of 9,500 is 40,250 hours. But labor did this work only in 13,000 hours. It means labor is not punctual. Not punctual. Labor wastes their hours, but in that hour, labor did more work. It means the labor need 40,000 to 50 hours, but labor is more motivated, more efficient, and did only in 13,000 hours. So labor saved 1250 hours rate, and the factory overhead rate is 110 multiplied by 110. So the variance is 137,500 favorable. Now we are going to net out this 165. Come here. There is 165,000 adverse. I hope you all clear it. I hope you all clear this. Now the next one is sales variances. Now I am erasing these variances. And the last variances we are going to discuss is sales variances. The last variances we are going to discuss is sales variances. Okay, now the next variance is sales variances. Now the next variance is sales variances. There are two variances of sales. The first one is sales price variance. The variance arises because of the price. The formula is budgeted selling price minus actual selling price multiplied by actual units sold. Now, what is the budgeted selling price? The budgeted selling price is 1210 and the actual selling price is revenue $12540,000 divided by total number of units 9,500. 12540 divided by 9,500. So 1320 is actual selling price per unit multiplied by number of units sold is 9,500. 1210 minus 1320 multiplied by 9,500 and $1045000 is your selling price variance. Now, is this adverse or favorable? Now, let you think that the budgeted selling price is 1210 and your actual selling price is more than budgeted. It means more selling price means more revenue. Revenue increase, so the profit increase. This is favorable for the company. This is favorable for the company, but it also have an adverse effect for the number of units sold. So now the next variance is sales volume profit variance. Now the next variance is sales volume profit variance. Now SU note here, volume is number of units, so these variance depend upon the number of units sold. Now the budgeted units sold minus actual units sold. Now the budgeted units sold minus actual units sold multiply by standard profit per unit. Now what is the budgeted units sold? The budgeted units sold is 10,500 and the actual units sold is 9,500. It means that company sell 1,000 less unit. This is not favorable for the company. Decline in sale means decline in profit. This is not favorable for the company. Multiply by standard profit per unit. How to calculate the standard profit per unit? As you see in the question, what is the standard selling price per unit? Now, what is the standard selling price per unit? The standard selling price per unit is 1210 less standard cost per unit. Now, what is the standard cost per unit? The standard cost per unit is 632.5. Now the standard profit per unit is 1210 minus 632.5. So the standard per unit is 577.5. 10,500 minus 9,500 multiply by 577.5. So the variance is 577. 500 adverse. Why adverse? Because in actual unit sold is less than the budgeted unit sold. So the reduction in sales is not favorable for the company. Now this is your throughout your all variances. This is your all variances. Now the second step is to reconcile these variances. Now the step how to reconcile these variances. Now the budgeted profit. What is the budgeted profit? Budgeted number of units sold. Now the budgeted number of units sold is 10,500 units. Multiply by the budgeted profit is 577.5. Now what is the budgeted? What is the budgeted profit? So the budgeted profit is 577.5 multiplied by 10,500. Budgeted profit is 6063750. You may adjust all variances which I erase it. Sir, the material price variance, material quantity variance, labor rate variance, labor efficiency variance, factory overhead variable expenditure variance, factory overhead variable efficiency variance, factory overhead fixed expenditure variance, factory overhead fixed volume variance. You may write here factory overhead volume variance, or you may write here factory overhead fixed volume efficiency or volume capacity. Not all of them, because factory overhead volume efficiency or volume capacity is split off, is a subdivided of volume fixed overhead volume variances. So now after that you may adjust all these variances. You come out with actual profit. You come out with the actual profit. Now what is the actual profit? Sir, the actual profit is sir sales. Now what is the sales? Actual sales is 12540 less cost. Now what is the actual cost? The actual cost is 5,825,900. So the actual profit is, sir, the actual profit is 12540 minus 5,825,900 The actual profit is 6714 100. Actual profit is 6714 100. I hope you all clear. I hope you all understood this throughout the session. This is the webinar of the PM paper of ACCA paper PM, and today our agenda is for variances. Due to the shortage of time, less time, we discuss only this type of variances. I hope you all understand these variances. This is your instructor Talha Shahid. If you have any query, any question, WhatsApp me on this number 0336 8946701. This is your instructor Talha Shahid. Okay, thank you so much for attending this webinar. If you have any question, please ask me. Okay, see you. Goodbye.